For one, for President Trump, he is proposing no new policies related to long-term capital gains and dividends. For those of you who don't know, capital gains and qualified dividends, as of today, receive what's called preferential tax rate, which means lower tax rates than other types of income. So there's no current proposal with President Trump that wishes to change that or modify that in any way. And just so you understand kind of where that sits, if your income for a married filing joint taxpayer is over $550,000 thereabouts, your tax rate is at 20% for long-term capital gain and qualified dividends. However, there's an additional 3.8% of what's called net investment income tax. Net investment income tax gets assessed at roughly $250,000. That gets added to the 20%. So now you're talking about a tax rate of 23.8% on long-term capital gains and qualified dividends. So that's where it is today. That 3.8%, by the way, that came out of Obamacare. So currently, President Trump, no new modifications to those policy. Now let's talk about Vice President Harris. Vice President Harris, her proposal is to issue a 28% income tax rate on income over $1 million and a 5% net investment income tax for those over $400,000. So as you can see, that's a bit of a dramatic jump to go from 20% on a long-term capital gain rate to 28%, and then the net investment income tax to go from a 3.8% to now a 5%. So now you're talking about long-term capital gains, qualified dividends to be taxed at roughly at a rate of 33% if your income is over $1 million. So that's somewhat of a big jump in her proposal. One of the other things with long-term capital gains that you should be aware of is with the estate tax. And that is related to the unrealized gains at date of death. Now, what's an unrealized gain? Well, let's say you hold stock and you've held it for a long time and it has these built-in gains in it. Well, upon your passing, there's an immediate triggering event that she wishes to have part of her tax proposal that is a deemed liquidation of those securities and taxes you on that at date of death, which is currently not the policy today, even under estate tax. That's not how that works, but that is I'll call it a somewhat aggressive tax policy position that she has, and that's for any estate over $5 million. That's her current proposal. With President Trump, his current policy, which are the existing policy today actually, is under the Tax Cuts and Jobs Act of 2017. What that means today is that every taxpayer currently has an exemption amount under estate tax of roughly $13 million per person. And President Trump's proposal is to effectively keep that permanent. So every taxpayer gets $13 million. That's roughly $26 million per couple. That would exclude any estate tax from the government of anything under $26 million. So that's good news for taxpayers and family businesses and things like that. That's helpful. With regard to Vice President Harris, her policy is to reduce the estate tax exclusion to roughly $3.5 million per person, and on top of that, a 55% tax rate on estates that exceed that. So if you do a comparison, President Trump's $26 million per couple, and Vice President Harris is roughly $7 million per couple. So when you talk about the estate tax, that's going to bring a lot more folks into the estate tax exposure, and which means 2025, there could be significant planning that may need to happen. But let's go through a quick example of what that might look like under Vice President Harris. Let's say a taxpayer has a house worth $2 million, life insurance of $1 million, general savings of $1 million, and a 401k of $3 million. That's total assets of, say, $7 million. If you exclude a $3.5 million estate tax exclusion, again, under Vice President Harris, and you take that times a 55% rate, you're talking about a nearly $2 million federal tax bill. It's 1.925 that goes to the government just for estate tax. Whereas currently, under today's law, there would be zero estate tax in that example. So your heirs would only get $5 million roughly from that $7 million estate and not the entire estate. So if Vice President Harris wins the election, what that means from a tax and estate planning standpoint is 2025 is going to be pretty significant with regard to gifting strategies and estate planning, because if she wins, there won't be any motivation at all to keep the provisions under the Tax Cuts and Jobs Act where we are today of $13 million per person. So if she wins, you can expect that to drop pretty significantly, which means 2025, you're going to see a lot of aggressive tax planning. And for those of you that may have a taxable estate, certainly something to consider. First of all, to President Trump and kind of where we are today. Currently, we're under the Tax Cuts and Jobs Act of 2017, which reduced tax rates in effectively 7 different brackets. President Trump wishes to keep that Tax Cuts and Jobs Act in play past 2025. You should know, if you don't, that the Tax Cuts and Jobs Act rates where they are today are effectively set to expire at the end of 2025. So that means the top tax rate, which is currently at 37%, is going to go to 39.6%. Not so fun. But in essence, that's what's going to happen. So President Trump wishes to keep that into play, but if Congress and the president don't do anything, that's essentially what's going to happen. So that's one of his policies. Secondly, one of his proposals, which is somewhat aggressive and I think unrealistic, and that is that proposal to increase tariffs to actually replace the personal income tax. I sort of discount that one because I think that's more of a talking point. I just don't see that happening. So that's one I would probably toss aside. Another one is he wishes to increase the child tax credit to $5,000 per child. That's a healthy increase. Another one that's a big one is to discontinue the state and local tax limitation cap. As you may recall, or those of you particularly in the Northeast may know, your state and local income tax deductions for itemized deductions, they're currently capped at $10,000, sort of a not so welcome provision from the Tax Cuts and Jobs Act of 2017. So that goes for your state income taxes, that goes for your real estate taxes. All that stuff is capped at $10,000. You can't deduct more than that. So one of the provisions that he wishes to expand upon is to actually get rid of that limit and allow state and local taxes to be unlimited as far as a tax deduction is concerned. So for those of you in the Northeast, that would be significant if that could get passed. Now, obviously, you need Congress to play ball, but if that happens, that's a pretty significant proposal and potential tax benefits for those of you in the Northeast and those high tax states. Another provision is exempt Social Security from taxation, exempt tip income from taxation, and also exempt overtime from taxation as well. With regard to Vice President Harris, she wishes to increase what's called the net investment income tax to 5%. Now, currently, if you don't know, there is a net investment income tax that is applied to investment earnings. So that would be things like dividends, interest, capital gains. For those of you making over $250,000 a year, roughly, it's an additional 3.8%. Her proposal proposes to increase that to 5%. She wishes to increase the top rate to 39.6, whereas currently it's at 37. So if you think about that increase alone, let's say you have interest income and you're at the top rate, you're paying a 37% tax rate today, plus 3.8% investment income tax. If Harris gets her way, that would be a 39.6% rate plus another 5 percentage points for net investment income tax. She wishes to expand the child tax credit to $6,000, and her proposal also proposes to exempt tip income from taxation, which is what President Trump agrees to as well. We are currently under the provisions of the Tax Cuts and Jobs Act of 2017 for businesses, which did a couple of things. One is it reduced the corporate tax rate from 35% to 21%, and it also provided what's called a qualified business income tax deduction for small business. You know, the backbone of America, I like to say, is for small business. It created that additional deduction, which we'll talk about in just a moment. President Trump's proposal under his new administration would be to cut the current corporate tax rate from 21% to 20%, and even further, an additional 5% if they produce their product in the United States. So that would be a 15% corporate tax rate under Trump policy for corporations. And that can be good for a lot of reasons. One is obviously typically more dividends are paid that way, which is good for shareholders and also good for those that have investments through their 401ks and whatnot. That's potentially a much better return for them as well. With regard to Vice President Harris, Her proposal calls for a 28% tax rate on corporations. So going from 21%, where it is today, to a 28% tax rate. Now, let's talk about small business. Small business, as part of the Tax Cuts and Jobs Act of 2017, small business was also provided a tax cut. Now, as you know, small business pays income taxes basically at the owner level. So small business doesn't pay income tax. That would be pass-through companies like S corporations and partnerships. They pay the income tax at the owner level. So what they did for them is they created what's called a qualified business income tax deduction, which is basically, at the end of the day, a 20% of the net income of the business, sort of a free deduction to those owners. And that's the equivalent of a tax cut for that small business. So remember, they gave corporations a tax cut, but they did a small business tax cut for pass-through companies like I just mentioned. They did it via this deduction. So with the qualified business income tax deduction, that happens at the owner level. Now, part of Harris's provisions is that particular deduction would go away. So that's a significant potential hit for small business. We'll see what happens, but that is part of the Tax Cuts and Jobs Act. So if that goes away, that could be a pretty substantial increase for small business. And remember, owners pay tax at their personal income tax rates, which Harris also wants to increase on the other side. So remember, current tax rate for taxpayers is at 37%. She wishes that to go to 39.6%. Now, one of the major provisions in here that many people probably aren't talking about is to expand what's called this net investment income tax to what's called non-passive activity. Now, let me just back up. Net investment income tax was created as part of Obamacare. That particular tax was an additional 3.8% on investment income. So dividends, capital gains, think of it like passive income. Well, her plan wishes to not only increase that from 3.8% to 5%, but also have that apply to other kinds of profits, meaning business profits that maybe wouldn't be considered passive. And so adding that on as additional tax would also be a pretty significant hit. So that's a big one that we just want to watch out for. So at the end of the day, they each have their different proposals, but from a strictly a tax standpoint and a taxpayer-friendly standpoint and a business standpoint, President Trump has a little bit more taxpayer-friendly versus a more government incentive program like Vice President Harris.